Interesting in your case to get there through the support of Bill Ackman here. And a big day for your company as well, focusing in on companies making it through Shopify and the growth in the e-commerce space. Clearly catching Ackman's attention here. So talk to me about the growth that you've seen in WeCommerce and your road to get here.
Yeah, I mean, it's been incredible. We've been in business for 15 years, and we've been a partner in the Shopify ecosystem for now, I think, over 10. And, when we started working with Shopify, they were 30 or 40 people. They hadn't raised venture yet. We had no idea it was going to turn into, $150 billion behemoth or whatever the market cap is today. So it's been a wild ride for us. And this is the culmination of a decade's work. And we're not done yet. We think that there's many decades left of growth in Shopify and the future of e-commerce. So we're very bullish.
Hey, Andrew, it's Julia LaRoche, and thank you so much for joining us today. Let's elaborate a bit more on the growth story here as it relates to Shopify's ecosystem and WeCommerce's role in that. I think you have a really interesting approach to investing. You kind of take this Buffett-esque approach to internet companies and investing. Where do you see the opportunities to grow and kind of walk us through the long-term play here?
Yeah, so I mean, it's very simple. I'll actually rewind a little bit. So we founded this business in 2010, and I owned a variety of other businesses. And in 2013, I was feeling incredibly overwhelmed. I had over 100 employees across 5 businesses, and I was the CEO of all of them. And so I made a decision to sell one of my businesses, and I ended up selling Pixel Union, which is the Shopify partner I referenced before. And I didn't know anything about investing at the time, but I started reading Buffett around that time because I suddenly had a bank balance. And as soon as I read Buffett, I realized I just sold a business that was an incredible compounder with a moat. So I slapped my forehead. I had stayed on the board. I was still a shareholder. And in 2019, I was just incredibly bullish about the future of Shopify. And I approached the private equity firm that bought the business. And I said, I'd love to buy the business back. And I partnered with Bill to do that, as well as Andrew and Howard Marks, Ryan Graves, the co-founder of Uber, and Shane Parrish from Farnham Street. And it's just been a wild ride. The thesis is very simple. E-commerce is set to double by 2024. Shopify has become the default e-commerce platform for independent retailers. It's the only alternative to Amazon that's at scale. It's now number 2 to Amazon, in fact. And we think that as e-commerce grows, Shopify will grow. And just like with the iPhone and the App Store or Salesforce App Exchange, there's this huge ecosystem of partners that will benefit alongside of it. And we are one of those partners in the ecosystem. And we've gone out and acquired more businesses. And we've just gone public to go out and do even more. So we raised $60 million yesterday. And we're really excited about it.
Yeah, it's certainly been a fascinating story, and I know it's one that we'll continue to follow. If you don't mind, I'd like to bring up Bill Ackman, since you just did, and the lunch that you all had. I was looking through our notes from our conversation about a year ago when you're telling me about that experience, and I know you all did talk about going public and some of the pros and cons. And in this process, any sort of advice that maybe, or conversations that you can share with us that you had with Ackman?
Well, I would say the number one thing that Bill has driven home to me and my business partner has really just been thinking long term. I think when you're young and things are going well, it's tempting to think about selling businesses or shuffling things around. And, he just really drove home that you should really only make 3 to 5 great decisions a year. Most of your time should be spent sitting on your hands and waiting for the next great opportunity. And then also just really digging into the details and knowing exactly what you're doing and spending a lot of time thinking versus acting. So it's been incredibly helpful having Bill mentor us through all of this.
Let's talk about the broader investment strategy. I think I heard Julia say it's sort of Buffett-like, and you've sort of alluded to the fact that you want to be sort of the Berkshire Hathaway of tech companies. This is a space where we've seen really frothy valuations. You've heard the conversations about concerns around that. How are you looking at that environment right now? And how do you think, what does that mean from an acquisition standpoint as you look to your next target?
Well, I would say we look at probably between 750 and 1,000 companies a year. And we probably say yes to 3 to 6. So in this environment, we look at a lot and we act very seldomly. And it's really meant that we just wait for the right opportunity where there's a great founder who wants to sell their business to somebody who will understand it. And people sell to us for the same reason they sell to Buffett, because we have a great reputation. We've been doing this for 15 years, and we're founders as well. We found that a lot of private equity firms that approached us over the years kind of looked at our business like a spreadsheet, as something to flip in a few years, lock in some gains. That's not how we look at these businesses. We want to own businesses for 10, 20, 30 years, and we want to keep the culture intact. Most founders don't want to sell their business to somebody who's going to just merge it into a larger business or flip it quickly.
Yeah, Andrew, it's interesting that you mentioned that, keeping the culture intact and also just your kind of operational approach. I understand you're in Victoria, Canada. Of course, Warren Buffett is in Omaha, Nebraska, with the various portfolio companies spread throughout the U.S. I do want to ask kind of about a trend we're seeing, folks leaving Silicon Valley, remote work, distributed workforces. And I know this is something you are way ahead of. Would love to kind of hear your thoughts on what you think the future of work looks like, and then how that creates opportunities for you in terms of investing.
Well, I mean, we've been remote for over 15 years, primarily because we're located in Victoria and we needed access to talent outside of Victoria. We obviously had a ton of smart people here, but over time, we hired more and more people. And it always seemed very illogical to us that you had to start, some huge expensive office in every city you moved into when there were all these wonderful collaboration tools. So we've now been doing this for 15 years. When COVID hit, we basically went off without a hitch. And to be honest, I'd say it's negative for us in some ways, because this was always our little secret that we knew, that you could operate a business with higher efficiency and happier employees working remotely. And so now I think the rest of the world has caught on to that. But I think it's great. I think it frees people from working in cubicles and gives people a lot more flexibility to have more balanced days.
I mean, having said that, Andrew, the arguments that a lot of startups have made for the reason they start in a place like Silicon Valley is because the capital is there. So while the Oracles and the HPs of the world may be moving out of the area, the startups are still there. And I'm wondering if you're seeing a shift out of that as well. Is that ultimately a good thing, that it's not so focused in these individual markets?
Well, I think it's been interesting to see some of the top venture capitalists in the world move to Miami and Austin and other places. And I don't think that those investors want to miss out on the best deals in Silicon Valley. So I think in general, after this, most investors will be much more comfortable diligencing over Zoom, working with a team that might be remote than they would have in the past. I still think that at the end of the day, the business travel that will remain is relationship business travel. While I ran a remote business for 15 years, I spent a lot of time going to Silicon Valley, going to New York, going to LA, and really meeting interesting people and focusing on that. And that helped my business a lot. So those relationships still matter. What doesn't matter is flying for 4 hours for one lunch. I think that's just silly.
Andrew, one final question before we let you go. And I just have to say, I thought this was really cool that you did, and it showed a lot of humility. And you shared a story about Slack and the role that your company played in building Slack and not taking equity in it and taking pay. And I thought it was really neat that you shared that. What did you learn from that, and why did you feel it was so important to share your experience?
Well, I think what I wanted to share is that it's never obvious. Here was a company where they were entering an already crowded market. There was many other chat products that had already existed, and they were a failed gaming company. They were about to go bankrupt. I think they only had a little bit of money in the bank. They'd burned through all their venture capital, and this was a last-ditch effort. And I was there in the very early days. When we started working with Slack, it was, they had a beta product and kind of a white screen. And to be honest, I just didn't get it. And Stuart had said, do you want to get paid in equity? And at the time, I was very conservative. I never took equity in anything. I just knew that cash was king and I had salaries to pay. I don't know if there's a lesson there, because if I had invested in every single startup like that, I wouldn't have very much money. So it's a difficult call. And I think that's why venture investing is hard in general. It never looks obvious.
Yeah, maybe a lesson to be taken away from the power of lunches too, though, and making friends that way. But Andrew Wilkinson, WeCommerce Co-Founder, appreciate you coming on here with us today, alongside Yahoo Finance's Julia LaRoche as well. Thanks again.